Hey everyone, welcome back to the channel. If you're into investing or just curious about how the markets tick this year, you're in the right spot. Today, we're diving deep into the wild ride that was the stock market in 2025, focusing on those key reactions that shook things up and the hard-hitting lessons we can all pull from it. Stick around, because by the end, you'll have actionable insights that could shape how you think about your portfolio in 2026. And hey, if this sparks any thoughts, drop a comment below. What was your biggest market surprise this year? Let's jump in. First off, let's talk about one of the biggest headlines, the US stock market hitting record highs despite all the noise. You know, the S&P 500 kept climbing, closing in on a third straight year of gains, even with inflation worries and geopolitical tensions bubbling up. Remember back in April when stocks dipped? Yeah, that felt scary for a bit, but by mid-year, equities rebounded strong in the second quarter. Investors reacted by pouring money back in, betting on that US exceptionalism narrative, the idea that America's economy just keeps outperforming the rest. But here's where it gets interesting. Not everyone was on board. Some folks pulled back, fearing overvaluation, and that created these mini volatility spikes that kept traders on their toes. Speaking of volatility, Europe had its moment in the sun this year too. Stocks there surged, making people say, "Make Europe great again." Why? Well, policy shifts in the EU helped stabilize things after some early year jitters from energy prices. Market reactions were mixed at first. Bonds dipped as investors worried about rate hikes. But by summer, optimism took over, with indices nearing all-time highs. If you were watching, you saw how quickly sentiment flipped from caution to confidence. It's a reminder that regional markets don't move in lockstep with the US, right? Over in emerging markets, growth slowed to about 2.4% annualized in the second half, and central banks kept cutting rates to juice things up. Reactions? Investors rotated out of high-risk areas, favoring safer bets, which pressured currencies like the dollar to strengthen even more. Now, let's not forget Asia. India and Japan were absolute standouts, with their markets flirting with records too. In Japan, the Nikkei rallied on tech exports and yen weakness, but reactions turned cautious when AI hype started cooling off. Yeah, AI was the buzzword early on, driving massive gains in tech stocks. But by mid-year, momentum lost steam as valuations got stretched. Investors reacted by trimming positions, leading to some sharp pullbacks. Think about those mega-cap tech names. They dominated. But when earnings reports showed slower AI adoption, the sell-offs were brutal. Globally, this created a ripple. Bond yields fluctuated, and commodities like oil swung wild on geopolitical news. One event that really defined 2025? The Fed's rate cuts amid shifting US policies. Markets reacted with euphoria at first, stocks popped on cheaper borrowing, but then reality hit with tariff talks and inflation fears. Remember the dollar's surge? Analysts predicted it at the start, and boy, did it deliver, pressuring international investments. Geopolitical stuff, like tensions in key regions, added fuel. Investors fled to safe havens, boosting treasuries while equities wobbled. But here's the twist. Despite all that, the overall vibe was resilient. Stocks ended strong, with opportunities in both growth and value plays. Shifting gears to tech and AI, man, what a roller coaster. Early exuberance pushed valuations sky high, with economic upside from AI innovations. But as headwinds like demographics and tariffs kicked in, stock downside emerged. Reactions? A classic rotation. Money moved from overhyped AI plays to undervalued sectors like industrials and internationals. International stocks were the darlings, up nearly 20% year-to-date by mid-year, stealing the show from US megacaps. All right, we've covered the reactions. Now let's get to the gold. Lessons learned from all this chaos. These aren't just theories. They're straight from what played out in 2025, and they could save you headaches down the road. Lesson 1. Market leadership gets tested. And boy, did it this year. Those big tech names that ruled 2024? They faced scrutiny as AI hype faded. The takeaway? Don't put all your eggs in one basket. Diversify across sectors because what's hot today might cool tomorrow. Think about how Europe and internationals outperformed when US growth slowed. That persistence paid off for those who stuck with a balanced approach. Lesson 2. Staying the course can really pay dividends. Markets fell sharply early on with uncertainty, but those who didn't panic and held through the dips saw recoveries. It's like that April drop, scary, but by June, we were back at highs. The lesson: emotional reactions kill returns. If you're in it for the long haul, tune out the noise and focus on fundamentals. Number 3. Amid elevated valuations, be super selective. 2025 showed us that not all stocks are created equal, even in a bull run. With volatility picking up, picking winners meant looking beyond the hype. Lesson here: do your homework, value quality over quantity, and don't chase bubbles. Bubbles are tough to predict and even harder to time, as we saw with AI. 4. Don't underestimate the economy's resilience. Despite megatrends like slowing demographics and rising tariffs, growth held up better than expected. Markets rewarded those who bet on underlying strength rather than headlines. Takeaway: broader economic indicators often trump short-term fears. 5. You can be a lousy market timer and still come out ahead. Holding winning stocks felt like a nightmare at times with all the swings, but those who stayed invested captured the upside. Stocks are spending less time in the S&P these days, meaning turnover is high. Lesson: focus on long-term compounding, not perfect entry points. 6. Panic is actually a buy signal more often than not. When everyone was freaking out over rate cuts or tariffs, that's when opportunities emerged. Don't fear all-time highs either. The S&P hit 37 more in 2025 alone. The real risk? Missing out by sitting on the sidelines. 7. Patience is key with individual stocks. You might hold something for a year while it flatlines, but give it time, and returns can compound. 2025 taught us that quick flips aren't always the way. Value investing demands waiting for the story to unfold. And 8. Diversification isn't dead. It's evolving. With internationals shining and US muted in spots, spreading across geographies paid off big. Lesson: rebalance regularly and don't ignore global plays. Whew, that's a lot to unpack. But think about how applying even one of these could change your game. 2025 was weird. Highs, dips, AI fades, policy shifts. But it proved markets are resilient if you're smart about it. Spotting winners early, like in internationals or value stocks, came from watching those reactions closely. Before we wrap, if you're serious about leveling up your investing knowledge, hit that subscribe button right now. We drop weekly breakdowns like this to keep you ahead. Like this video if any lesson resonated, and comment your top takeaway from 2025. Share it with a friend who's just starting out. They'll thank you. For more, check the links in the description for resources on building a resilient portfolio. Thanks for watching. Let's crush 2026 together. See you next time.